Good afternoon. I'd like to thank all our guests and clients who are assisting this fourth session of our 10th International Conference for Multinationals. This session will be focused on financial restructuring, both from the capital markets and tax perspective. We have here myself, Reinaldo Ravelli, Inc. Gertz, for our tax partner from the New York office, Daniel Facó, our partner in the equity capital markets, and Luis Ambrosio from the debt capital markets department of our office. I would like just to start describing a little bit the agenda of this presentation. We have 7 topics. We hope we have sufficient time to cover all the 7 topics during this 1 hour and 20 minutes presentation. But just before we start the presentation, I would like to comment that, especially for our Portuguese-speaking audience, that in first hand, our office is launching an e-book on current international tax matters. The e-book is a compilation of articles written by the tax team of Trent Ross Watanabe, reflecting their experience on cross-border transactions. Some of the topics that are addressed in the e-book are also discussed in this conference, such as international trends of digital service taxation, transfer price development in Brazil, and compliance and report obligations in international transactions. For other topics that are not expressly addressed by the panels of this conference, we organize and invite you to join separate webinars. For all topics, the authors are of course happy to organize separate discussions with you, if you feel it may be of special interest to your business. The e-book will be available for download at the Trent Ross Watanabe website and soon at the Kindle platform at no cost. You also will receive a link for download along with a recording of this session. We hope that you enjoy it and feel free to reach out to us if you'd like to discuss any topic in more detail with the respective authors. So, that being said, let's start our presentation. We thought that it would be important to just provide a brief overview of the main tax aspects that we should consider when we are talking debt versus equity financing. So with that background, we will be more able to better discuss the alternatives and strategies that we will discuss along this presentation. So basically in Brazil, when we are discussing debt versus equity finance, what we have to consider from a pure tax perspective in Brazil. Debt is generally attractive because the interest paid to, let's say, a foreign lender, if it complies with transfer pricing and thin capitalization in Brazil, is generally deductible at 34%. And on the other hand, is subject to a 15% withholding tax. So tax rate arbitrage in Brazil may reach up to 19% of the interest expense. And there are other instruments that we will discuss here that they may also have the benefit of a 0% withholding tax. So at the end of the day, this may be a very attractive instrument at the debt financing to achieve a tax shelter of 34% in Brazil. On the other hand, when we are talking about equity financing, the foreign clients should know that dividends are currently exempt. There is a specific panel here in this conference that we discuss about the proposed tax reforms in Brazil. One of them is to start imposing withholding taxation on dividends, but what we have for now, it's an exemption for dividends. So when we're considering repatriation through dividends, clients should consider that there's a 0% withholding on dividends, and an alternative mechanism which is similar to interest, but it's interest paid on equity to shareholders. We have the interest on equity, which has the similar effects of an interest payment. So basically, this is a brief general overview of the main tax aspects that we should bear in mind when we're considering debt versus equity financing in Brazil. Then in this panel, we also discuss some structures in Austria, how we can implement structures involving Brazil and Austria. We have here Inc. So she also comment briefly which are the main tax aspects to bear in mind when we are structuring any cross-border transaction between Brazil and Austria.
Yeah, that's right, Reynaldo. Thank you very much. So first question, probably why Austria? Well, many of you probably will have a trading company or some subsidiary in Austria, because right now we still do have a very favorable treaty between Brazil and Austria. We hope that this will stay in place. We know that the treaty is being renegotiated, and so far I have not heard from the Ministry of Finance on any developments there, but we obviously do hope that the preferential provisions in the treaty will prevail and will stay in the treaty. Now, talking about straight debt or equity in Austria, what are the characteristics of Austrian taxation? If we talk about straight debt into the Austrian company, so first of all, one thing to consider is Austria does not have any written debt equity rules. So we do not have any sort of thin capitalization rules in Austria. So for the time being, you could potentially leverage your company up to the roof and you would still be considered having a valid debt financing. That obviously is always subject to the circumstances and whether it could potentially be abusive or anything like that. But other than or different from other countries, we do not have written debt equity rules. So in general, straight debt and interest paid by the Austrian company is subject to a deduction against 25% income tax rate, and likewise interest received by the Austrian entity is subject to a corporate income tax rate of 25%. So that is really pretty straightforward. Now, when we talk about debt financing of an Austrian company, you have to be aware of the interest deduction limitation under Austrian law. Many of you might have heard of Anti-Tax Avoidance Directive 1 and 2 of the European Commission, which imposes a debt limitation or debt deduction limitation of 30% of EBIT. The Austrian law has not yet introduced this 30% limitation. So we still are basically the one-eyed under many blind countries in Europe, and we still have a full deduction of interest paid out to related parties for as long as the related party is in a country that applies a taxation that is 10% or more. So if you, as an Austrian entity, pay interest to a low-tax company, then you might not be able to deduct this interest payment. Where the Austrian company is receiving is paying interest, there's no withholding tax on interest paid to a corporate lender. So if you have a Brazil-Austrian structure, the Brazilian company grants a loan to the Austrian company, then there should be no withholding tax on it. We see many structures with a back-to-back financing where you have the Brazilian company issuing a note or giving loans to the Austrian company, and then the Austrian company is on lending these funds to various other operational companies within the group. Generally, this is absolutely feasible from an Austrian perspective. And different from many other countries, you might actually be able to get a ruling from the Austrian tax authorities agreeing on taxing the Austrian company not on the spread. So basically the difference between the interest rate charged and the interest rate paid. But what we were able to achieve with the Austrian authorities in many cases was that we achieved a ruling that subjected the Austrian company to taxation based on the handling fee, which can be quite substantially lower than the spread that the Austrian companies usually realize. So there are ways to get a transfer pricing ruling on this. It would obviously be a unilateral ruling, But you can play with that, and there are certain opportunities for Austrian companies to get this ruling. If we go to the next slide, please.
Yes.
So any withholding tax that the Austrian company would have to pay, for example, if you had a Brazilian company lending into the Austrian company lending into Brazil, pardon me, and the Brazilian company paying interest to the Austrian company, and if there were withholding tax on it, then Austria can give a credit or will give a credit for this. In relation to Brazil, the beauty of the current treaty in place, and again, I really sincerely hope that this provision will stay in the treaty as it is being renegotiated, we have a matching credit in the current treaty. So what does that mean? If Brazil pays interest to the Austrian lender and has either a withholding tax of 15% or, when we will discuss that later, a 0% withholding tax, Austria will not only credit the 15%, but because of the matching credit in the treaty, it will credit 25%. Now, if you consider that interest income in Austria is taxed at 25%, that gets you to basically a zero taxation. So you will get the interest of, let's say, 25 into the Austrian company. You will get a tax credit in the amount of 25% on this, and you will be taxed at 25% on this interest, which basically leaves you zero taxation in Austria. And the only tax you will have to pay is the 15% withheld by Brazil. Now, this really works very well when we come to the structures where you have a 0% withholding tax in Brazil, which is, I think, further down. But if we talk about hybrid instruments and equity financing, when we look to structures where you have a Brazilian company as a subsidiary of an Austrian company, which granted is probably not the most common structure, but there are structures where Austria is a holding company in between the Brazilian company and the ultimate parent company. So if you have an IOE that is granted by the Brazilian tax authorities, Austria so far didn't really know what to do with it, whether it is interest or dividend or what is it. It's some sort of a hybrid something, so we don't know this, so could be either interest or dividend. From an Austrian perspective, it really actually doesn't matter whether you characterize it as interest or as dividend. Assuming Austria would say it is interest, it would be taxable in Austria at 25%, and you get the matching credit of 25%. So basically, it is, again, zero tax in Austria. Assuming it would be characterized as dividend, then Austria would generally say the dividend is exempt from corporate income tax in Austria. However, because the dividend was actually deductible in Brazil for tax purposes, Austria invokes a provision which is basically an anti-abuse provision and says, well, wait a minute, you cannot get a deduction on the one hand and zero taxation in Austria on the other hand. So we will tax this dividend and we will subject this to 25% corporate income tax. Now, for dividends, the same matching credit applies as for interest. So you would be taxed on the dividend, but at the same time, you get a matching credit of 25% on this dividend that is being taxed in Austria. So if you are in a situation where you have an Austrian company holding the subsidiary in Brazil and you have an IOE situation, then that is something which can be work very beneficially for Austrian purposes.
Yeah, we hope that the treaty doesn't change in this respect, right?
No, I know.
To maintain the matching credit.
I know, I hear you. And it's really, I tried to get some more information from the Ministry of Finance, but their lips are sealed and they wouldn't talk to me about the current status. So that can be bad or good. I don't even know what to say. But I mean, the renegotiation has been ongoing for quite a while. So we can only wait and see and hope that something good will come out of it. So, and I think we have an example slide on this. We talked about all this. Yeah. So
this is especially interesting. Yeah.
Yeah, it's kind of visualizing what we just sort of said. So you have the U.S. company with an Austrian subsidiary, the Austrian subsidiary with the Brazilian subsidiary. And in Austria, I mean, Renato, maybe you can quickly walk through the Brazilian transactions that we have here, and then I cover the Austrian side.
Sure. What we depict here is a structure where the Brazilian company would issue the famous infrastructure debentures or investment project debentures. We will also discuss this structure a little bit further ahead in this presentation, but the main benefit of those debentures is that they can pay coupon payments to the non-resident debenture holder at a 0% withholding. So this is a mechanism to attract investments for infrastructure projects, for investment projects, long-term projects, whereby the Brazilian company can pay interest, take the deduction at 34%, but on the other hand, remit the payments at a 0% withholding, for instance, to Austria. So this may be very attractive from a Brazilian tax standpoint.
Yeah, and for Austria, the same applies what I just said. You have the matching credit in the treaty. So the interest received by the Austrian company would generally be subject to 25% corporate income tax. But because you have the matching credit in the treaty, you are not effectively not taxed on this income. So you would include it in your taxable income and in your tax return. But by the same token, you would immediately request a matching credit of 25%, which leaves you with effective zero tax on that income. So you have zero withholding tax in Brazil with a deduction against the 34%, and you have zero withholding or zero tax in Austria. Now, in this specific example, the US company might not necessarily be the best company to be the parent company of the Austrian entity, because on dividends out to the US, you have 15% withholding tax per the treaty. So if the structure allows, it would be good to have a different subsidiary in between the Austrian and the US company. But in general, at least, it gives you a little bit of a blocker situation where you do not suffer additional tax in Austria.
And just to let you know for our audience, if you have any questions, we have a Q&A. The chat is not is disabled, but we have a Q&A. So if you have any questions, please send us, and we will try to answer you during this presentation. So basically, I think we had a good start, let's say. This will be the structure that we could work with Brazil and Austria. And now let's go to the second topic, where we will discuss a common structure that we see adopted by Brazilian multinationals to get financing abroad. Usually involves the organization of a finance company that we are calling here FinCo in a jurisdiction. In this particular example, we consider FinCo organized in Austria, but we also see other jurisdictions that work well as well, like Luxembourg or the Netherlands. Basically, what we see are a Brazilian company organize a FinCo, let's say in Austria, and this FinCo will issue bonds to the market. Usually one of the main benefits is that there is no withholding tax on the interest paid by FinCo to the bond holders, which if the Brazilian company had issued direct debentures, for instance, could be subject to withholding tax in Brazil. So there is one benefit here of using this foreign vehicle. And then we need to implement a back-to-back transaction to bring the proceeds back raised from the bond issuance to Brazil. What we usually see of those structures is whether FinCo could extend a simple loan to Brazil, but there may be a withholding tax that is paid on the interest that the Brazilian company pays to FinCo, or there may be other structures like the debentures that we mentioned, or pre-export payments that also benefit of a 0% withholding. So there are structures that we can consider to bring this cash back home, that FinCo could send the money to Brazil, and Brazil wouldn't have to pay any interest subject to withholding tax. But it's also important to understand how the effects would be in Austria, for instance, if we implement this kind of structure.
Yeah, no, absolutely. And this is basically only a reiteration of what we have said before. And maybe you can go back to the structure slide, because I think it's easier to maybe visualize it. So we see this structure a lot where you have export financing, right? Where the Austrian entity is actually issuing bonds and then grants export finance loan to the Brazilian company. And then you have a 0% interest going back into Austria, and Austria is then usually taxed on the spread of the interest that it pays to the market and the interest it receives on the Brazilian company. Because again, of the tax-bearing credit, you would get a 25% on the interest received. So this has been really a very good and very handy structure, and has been implemented many times in the past. The only caveat I would want to make for the future is, Austria will have to implement the 30% EBIT deduction limitation at some point in time. So they're currently a little bit in the fight with the European Commission, because they consider the current rules as being completely sufficient, whereas the European Commission says, no, not so much, you will have to do something. So eventually you will see some sort of a 30% limitation coming into the Austrian legislation, just as it is or should be in most of the European countries. So you might have an issue with deducting your interest that is paid for as long as it is a related party payment. So if you really raise the interest or the bonds on the open market with no related entities, you really shouldn't have that much of an issue. But as soon as there are related parties in the mix, you might have a problem. And again, depending on how the Austrians will, implement this 30% deduction. And the other caveat I would want to make is, when you look to the level of EU holding, you would usually think that FinCo, the dividends that FinCo pays to European holding, would be exempt from tax on the level of the European holding, because it is a participation exemption that applies within the European Union. There shouldn't be any tax. Now, under the anti-tax avoidance directives, all European countries were required to implement CFC taxation. You, as a Brazilian audience, you are so used to CFC taxation, and that is something that cannot even bother you, because you've been living with that, I believe, for the last 20 or 30 years. Well, for Europe, it's a little bit of a new concept, at least for most of the European countries. And each country has implemented in a slightly different way. So usually what the CFC taxation does, it subjects the income of the EU holding to, or actually it attributes the passive income that is generated by FinCo to the EU holding, and then taxes it on the level of EU holding. And two of the conditions for the CFC to apply is that you have passive income, which in this case you clearly have as interest, but also FinCo needs to be subject to a low taxation. And then there are a couple of safe harbor rules how you get out of it. Now, every European country has implemented differently, and to no surprise, the Netherlands is the more relaxed, or the most relaxed country that kind of found a way to implement a CFC regime that has many exits and does not really apply to many of the structures where other countries would apply CFC. So if you are inclined to implement a structure like this, you will need to look into the CFC regime of EU holding to see whether this income that is generated by the Austrian company might be subject to CFC taxation on the level of EU holding. But other than that, it's a fantastic.
Sorry. No, yeah. I would just mention that at the end of the day, the taxable income subject to the CFC at the level of the EU holding would be the minimum spread that remained at FinCo, right? So if it's a total back-to-back transaction.
Yeah, Yeah, usually that is correct. But then again, you would really need to look into the respective CSC regimes of the respective your holding company, because they all come in different shapes and sizes. In general, you would think when Austria is a FinCo holding location, you would not have a low taxation, because we have an income tax rate of 25%. So that's really can hardly be considered low taxation. So you would probably be out of the scope of CSC just by virtue of the 25% headline rate. But you never know how it is implemented in the respective countries. So I would just simply mention this to have, on the radar. If you implement something like that, don't forget about the CSC and just simply check it.
Great, thank you, Inc. I think we can go to the next topic.
Yep.
I'll let Luis comment on that. It's a changing law that occurred back now in June that expand the scope of the infrastructure debentures to include other projects. I'll let Luis comment on that.
Hi, Reinaldo, thanks. I think that the important thing to discuss about these structures that are more beneficial from a tax point of view, either to refinance or to raise funds abroad, it's much linked with what Inc. and you have just explained, because the biggest benefit for companies that are in a situation where the costs of the existing finance are very high and they want to roll over or exchange the existing finance, or to raise funds in this current situation where the company may have some kind of liquidity problem. And when we are talking about substantial amounts for big companies, it makes sense to structure such finance through using as a company in the middle, or as intermediary, a Austrian company, as Inc. mentioned. So, for instance, in way to work the best, as Inc. mentioned, you should use some kind of that instrument which the taxation in Brazil is reduced to zero. And then under Brazilian law, you only have some few situations which this type of finance exists. One, which is the first type that you have described in one of your slides, are the debentures, right?
Yes. The famous infrastructure debentures.
The famous infrastructure debentures, which brings us to the sustainability bonds, which was a amendment to the law which regulates the incentivated debentures. But under the law, which is Law 12.431, it's not only those types of debentures that have the tax benefit, right? What we call the benefit or the incentivized debentures are just a group of that instruments which are part of what is the Article 2 of such said law. But a lot of people forget that you have another option, which is under Article 1, which means that it's any debt or security which is issued in a public manner, right? And which is acquired by a foreign investor. So this one also fits very close to the structure that is being discussed, because you could have an issuance of securities. This issuance of securities would be acquired by the Austrian company. If the companies have a new project in Brazil, of course, they can use the options of Article 2, which are to finance what we call priority projects, which are projects in the area of water and sanitation, to finance energy, to finance other types of infrastructure like airports, roads, etc. And now with the change recently in 2020 through Decree 10387, you can also issue with the same tax benefit debentures, which the purpose is to finance green projects and sustainable projects. So there was an expansion of this purpose under Article 2. And as we see in the current slide, these are, for instance, projects in the renewable technologies, small hydro stations, urban mobility for railways and light railways, buses that operate with clean energy. So that's a very interesting option for the companies. If we go to the next slide, Reynaldo, the characteristics for these requirements, they did not change per se. So basically, in order to issue these debentures or bonds in Brazil, of course, it must be based on inflation plus a fixed rate. So this is a requirement. You must have semi-annual payments of interest, and you must have a 4 years minimum weighted tenor for the duration of the issuance. So that's one type. The other types of instruments that may be used under the structure mentioned by Inc. Relates to finance using pre-exportations, which would be pre-export payments. So that's one type of finance that it's also available for companies that are big exporters. We have several examples, not only on the agribusiness sector, but we have petrochemicals, we have food. I'm just mentioning some of the big, we have cosmetic, retail. So these are some examples of our clients that exports goods and that could benefit of this restructuring or raising funds through the Austria. The other types, of course, also involve the certificates for real estate and the certificates for agribusiness. So basically, those are the main 4 types of finance that exists in Brazil and which benefits from the decrease of the taxation over interest and any other payments other than principal to 0%. Okay. If we move to the next slide, here's a continuation of what would be the requirements, right? So we can go over this one because we're just listing what are the requirements. And maybe you want to talk a little bit about the reduction on the tax and what are the tax benefits right now on those instruments.
No, basically, well, as you mentioned, this is a very attractive instrument for financing in Brazil and also from a tax perspective, because as we have been discussing here, the coupon payments would benefit of a 0% withholding, while the interest expense would generate a tax deductible expense at 34%. So at the end of the day, this can represent a tax shelter of 34% in Brazil. So when we are discussing financing structures, the use of those sustainability bonds can be a very attractive instrument. And there's also the benefit of the 0% IOF exchange. So at the end of the day, the tax costs associated with those bonds are minimum in Brazil.
Yeah, just to give an example of, we already done some of these deals. They're very tax efficient, but just to give to our audience a straightforward example of how it works. Basically, it's not that complicated from a structural point of view, because in essence, what you have is an Austrian company issuing securities abroad. So this Austrian company would issue the securities abroad, raise the funds, and then the Austrian company would use those funds that they have raised in the market to buy the securities issued by the Brazilian company. And then the funds would flow into Brazil through this local or through this issuance, which is acquired by the Austrian company. It's very important because in essence, and then Inc. can correct me if I'm not very precise, from a finance point of view, the important thing is also to ensure that the financial terms and conditions of the issuance that you do between the Brazilian company and the Austrian company, right? They have sufficient room, or at least match the issuance between the Austrian company and whatever are the holders of the bonds. Because in this way, you will ensure that you have a mechanism that will flow in the dates of payments, the payments of principal and interest. So you will have a seamless flow of proceeds, and you would have no short amounts that you would have to find another way. So in essence, the way we do it is we first figure out what is the spreads and the amounts that we would be able to charge here in Brazil. For instance, if we are doing the infrastructure debenture, following the rules that the law established as the minimum requirements, right? You would test the market in relation to those financial terms to see if a bond issuance would be successful. And once you have those two ends tightened, then you're ready to draft and prepare the documents in order to put in place the finance. So it's not that very complicated. It takes some work, but in terms of the economics, it's extremely advantageous to Brazilian companies to structure it this way.
Great, thank
you. So
Luis,
I have one question. Luis. Given the current market conditions where you see that interest rates are fluctuating tremendously, and you're talking about negative interest rates in the European Union currently, the US is a little different, and to be honest, I don't really know what the interest rate level is right now in Brazil. But as you just said, you would expect Austria in your example to generate a spread, right? So you would expect that Austria charges a higher interest rate to Brazil than it pays to the holder of its bonds or its securities that it issues. Mm-hmm. So how do you see this in the current environment? I mean, is it still a feasible structure given these uncertainties and the interest rate fluctuations throughout the globe? Or is this something where you would say you might want to skip Europe for the time being because of these incredibly negative interest rates and not knowing whether you can really charge a high enough interest level to generate the spread?
Yeah, I mean, right now the interest rates in Brazil are very, very low. I mean, historically, it has never ever been this low, right? The basic interest rate, which is around, I think, 2.25% or 2.5% per year, if I'm not mistaken. But there still exists a market for those foreign denominated bonds. We have recently assisted a group of banks on an issuance that was a very big issuance, around $600 million of bonds. And the way it works is that a lot of the companies in Brazil, there are, and we will discuss that in the next segment, are in a distressed situation. So for them, the reasoning is not only the interest rate, but also the term of the loan. So even if they could obtain a lower interest rate in Brazil, it's almost impossible or very difficult, I would say, to obtain very long-term loans. The reason why is that usually the long-term loans in Brazil was only granted by the Brazilian Development Bank, but not by the private banks. And the private banks and the capital markets, usually you would have issuances that would vary from 5 to 7 years. On the other hand, abroad, you have much longer tenor for bond issuances. So in the case that we have worked, it was more than 60 years. Although the interest rate probably was higher, the company got 60 years. Of course, there are call options, but you don't, it's impossible to get that in Brazil. So when you combine the structure with the type of tenor that you have still in the markets, either in Europe or Asia or United States, for a lot of the companies that are facing, let's say, short liquidity problem, it makes a lot of sense, even with the low rates, to go abroad and make those type of issuances. I don't know if I answered your question, but that's the reason.
Well, maybe, I mean, given that Brazil interest rates are so incredibly, well, compared to Europe, higher, it might actually even be, you know, an opportunity to create an incredible spread in Austria by charging or paying not that high interest rate to the market, because the interest rates in Austria also for lending are just really, and borrowing are really low. And then if you have such a high interest rate in Brazil, then perhaps you can create a really good spread.
Yes. So I think there is a good opportunity there, even with the low interest rates here in Brazil, to carry out this type of financing.
And I think that another attractiveness of those bonds is that you could issue them not only for new projects, but also to repay other costs incurred in the last 2 years. So for instance, if we have some client that until this new changing law had a project that now can qualify and has incurred in costs in the last 2 years, this may be an alternative to refinance. If they went to the market and now they are paying a higher interest subject to withholding tax and are bearing the cost of the withholding, now rethinking a refinance through those bonds can be a very good opportunity.
Yeah, absolutely right. I think it depends on the underlying, let's say, finance that you will use between the Brazilian and the Austrian companies. As we said, certain types of finance, they only fit certain types of activities, right? So export prepayment, of course, works very well for those Brazilian companies that export goods in a regular basis to foreign importers, right? But you're right when you're saying that there were projects that before the change to the infrastructure, the debentures law, would not have qualified. And now they may qualify under the group of sustainability or green projects, right? And which you can use to substitute existing financing that are still to mature by increasing the maturity of the debt and maybe decreasing the cost, and for sure decreasing the cost for the company, because usually what happens when you have cross-border issuances is that the borrower is the one responsible to make the gross up for the
exactly. Yeah, yeah.
of interest.
Why do you discuss the withholding? Because
So
borrower
they
is bearing this cost.
So when you have a 0% withholding, you don't have
exactly
the need to make the gross up. So it's much cheaper.
Exactly. Yeah.
And probably what you're seeing now, it's a market condition that today, strangely, the interest rates are lower than they were before, even though we are in this
Pandemic.
under this pandemic crisis, you know.
Mm-hmm.
So a lot of companies have taken the opportunity to do that, and that's something that the company should make the math and really consider doing, for sure.
Great, thank you, Luis. Thank you, Inc.
You're welcome.
Let's go to the next topic. I'll let Daniel comment on equity public offerings, how he's seeing the market right now, and some hot topics.
Thank you all to join this panel. The idea here is to run through the most traditional and ongoing structures for capitalizing Brazilian companies or issuers through Brazilian offerings, equity offerings. So probably due to the very low interest rates and to the uncertainty as to whether or not the market will still be facing these low interest rates, the equity offerings in Brazil have currently achieved very unprecedented scenario in terms of volume, of high volume. While debt offerings should also be under a very high demand, somehow equity offerings became the most attractive way of bringing money into Brazilian companies. And in Brazil, we would have three types of equity offerings that we're going to be running through today. The first is the traditional registered equity offering, which requires a pre-registration with the Brazilian SEC. The registration could be of securities issued by the Brazilian company, or BDRs, which are Brazilian depositary shares, linked to securities of non-Brazilian companies. For purpose of definition of each entity or each issuer, Brazilian issuers in the Brazilian law consists of a company that is incorporated under the Brazilian laws. It doesn't matter whether or not the company itself has business outside Brazil. And on the other hand, foreign non-Brazilian issuer would be deemed any issuer that is incorporated outside Brazil, but it has to be presented evidences that the issuer has at least 50% of its assets located outside Brazil for the issuer to be eligible to do the BDRs in Brazil. So going to the next slide, we will be now discussing what are the main topics that we need to pay attention when a company is pursuing an equity offering in Brazil. The regulation is very alike the ones enforced in the United States, and actually the Brazilian regulation somehow tries to mirror the disclosure governance rules that are usually applicable under the U.S. Securities Act. The one particularity of Brazil is that preemptive rights, they are usually not avoidable based on contractual arrangements, except, and the one exception is when you do a registered public offering. So you don't need to deal with preemptive rights if you do a registered public offering and if you are a Brazilian corporation. Of course, if you are a BDR issuer, the applicable rules for purpose of preemptive rights would be the rules under the jurisdiction in which the issuer would be incorporated. From a marketing perspective, all the disclosures that are usually very typical in non-Brazilian offerings are also applicable in Brazil, such as the filing of a registration statement comprising all the material disclosure about the business of the issuer, about the financial history of the issuer, risk factors, related party transactions, remuneration, management remuneration, compensation. So you have to go into all the details in order to get the registration statement ready for filing and previous review of the Brazilian SEC. You also, in connection with the financial statements, if you're doing an offering, it's expected that you are able to show your financial history for the past. The issuer shows the financial history for the past 3 years, full years prior to the offering, in addition to any interim period that will be covered if you, for example, do an offering after the third quarter or after the second quarter of a certain fiscal year. So you would need also to disclose in the documentation the financial statement for the period of X month ending into the most recent month prior to the offering. Can we go to the next one? So now when we talk about offerings in Brazil, you ask yourself, well, the security should be listed elsewhere or only in Brazil? You must do the listing in Brazil if you are doing an equity offering, a registered equity offering in Brazil. But you could also do the listing elsewhere. We call it a dual listing transaction. Of course, if you do a dual listing, the most typical dual listing transactions are the ones that involve listing in Brazilian and in the Brazilian stock exchange, as well as in the New York Stock Exchange, for example. Major Brazilian corporations such as the oil company Petrobras, the mining company Vale are all dual listed. Some of them are even triple listed, including Luxembourg and other places and other jurisdictions as well. So assuming you're going to be only doing the listing in Brazil with the stock exchange in Brazil, there has become very popular from a governance perspective to list the shares with the Brazilian new market, Brazilian Stock Exchange special listing segment called the new market. The main topics that differentiate issuers when they are listed in the new market with the Brazilian Stock Exchange in this specific segment are the ones related to corporate governance that would allow investors, shareholders to have more stronger governance rights in connection with the issuer. So in this case, for example, the one share, one vote rule applies. You only this segment is only eligible for companies that have only common shares, and therefore companies that would like or would need to keep the preferred shares or any type of non-voting security would not be eligible for the new market rule. There is a mandatory tag along tender offer in case there is a sale of control. The board of directors must be formed at least of 5 members, and 2 of them must be independent members, meaning, and the independency is checked by the Brazilian Stock Exchange based on certain best practices approach. And so, for example, the member of the board should not should not have worked with the issuer for the past 3 years and should not have any provide any relevant service to the issuer, even as an external consultant. It of course should not be the same person or a related person, a person related to the controlling or a shareholder or any shareholders that are part of the controlling group of the company. And there would be like many other examples that would not like make it possible for an individual to act as an independent member of the board of directors. If the board of directors has like more than 5 members, for example, 10 members, then the applicable rule would be a minimum of 20% of the members should be independent. So in certain situations, you could have more than 2 members of the board of directors being independent, such as if you do have not a 10, but an 11 board members, you have 3 members because then you have to round up to the highest number. The free float after the offering, after the initial public offering, should be of at least 25%, subject to certain exceptions based on the size of the offering. So if you have quite a huge offering that the Brazilian Stock Exchange understands it will be able to grant enough liquidity to the investor despite of not achieving the 25% minimum free float, you would be entitled to list in the new market because of this exceptional analysis of liquidity. So going next. And then there is like another very popular equity transaction that has been responsible for more than 50% of the transactions that are currently happening or that has been happened in the past 3 years in Brazil, which are the exempted restricted equity offerings, equity public offerings that some are very similar to the 144A Reg S transactions that take place and that are also exempted from registration in the United States. The only difference is that the Brazilian regulation still calls these offerings public offerings and not only non-public offerings like it could be the interpretation under other jurisdictions. The difference here is due to the fact that the current shareholders of the company, because of the preemptive right concept that would only be exempted in registered public offerings, the preemptive rights within the context of an exempted restricted equity offering would apply with a reduced term of 5 business days. So the regular preemptive rights, minimum preemptive rights applicable in Brazil, the Brazilian laws would be a 30-day waiting period for purpose of exercising the preemptive right. And in a restricted equity offering, such preemptive right is converted into the terminology of priority subscription right, and it has to be complied with by the issuer with a reduced timeline of 5 business days, which is counted as of the public announcement of the restricted offering. And the restricted offering has the particularity of not being able to be directed to more than 75 so-called professional investors. Professional investors in Brazilian regulations are a bit different from the qualified institutional buyers that apply under 144A rule exempted offerings in the United States, because it relates to a standard that is defined by not only financial institutions, investment funds, and other accredited investors, but also individuals that have more than 10 million invested in financial instruments. So the 10 million standards apply. The 10 million is Brazilian currency. So to extent you approach professional investors, you must only approach up to 75 professional investors within the context of this offering, and only be able to place the shares to up to 50 professional investors. The usual question here is whether the sale effort that you might do outside Brazil to non-Brazilian investors would be subject to this specific restriction. And the answer is no. In Brazil, outside Brazil, 144A QIB investors would be outside the scope of 75 or 50 professional investors that can be approached in the Brazilian territory, because the Brazilian rule only applies to sale efforts within the Brazilian territory. If you do a restricted offering, the regulation only allows you to do another restricted offering, or exempted restricted offering, if upon completion of a waiting period of 4 months since the completion of the restricted offering. So that's basically a way of getting the issuer to wait for the securities absorbed in a certain transaction before it does another transaction, another capital increase, or even another secondary offering through the sale of shares of the existing shareholders. Can we go to the next one?
And if I can step in, Daniel.
Sure.
And we also need to take into account that there are certain a special tax regime for non-resident investors who invest in the Brazilian capital markets that provides a more attractive tax treatment for those investments, for those investors, when compared, for instance, for a direct investment in Brazil. So when we are talking about a foreign investment in the Brazilian capital market, capital gains can be exempt, for instance, while a direct investment would be subject to withholding taxation in Brazil. Trading shares in the Brazilian stock exchange are exempt. Also, making capital injections in the Brazilian company, share subscription through the capital markets also will benefit of the 0% IOF exchange when compared to a direct investment in the Brazilian company that may be subject to a 0.38 IOF exchange. So there are benefits of investing in a public company in Brazil. On the other hand, there are certain challenges. For instance, if we have a non-resident investor that holds a direct investment in the Brazilian company and wants to list the company, and then it needs to make the famous conversion of 4131 investment to a 4373 investment. This conversion, there is a discussion whether this conversion should be made consider the market value of the company, which may attract capital gains taxation on the conversion of the type of the investment. And we also need to consider situations that we have a Brazilian company merging the shares of another Brazilian listed company. We have two listed companies merging the shares, and when we have non-resident investors, according to the Brazilian IRS, the merging company is required to collect the withholding tax of all the non-resident investors if there is any gain. And this can be a big challenge to determine the acquisition costs of each of the non-resident investors. Although there could be arguments to say that this is a transaction in the stock exchange, so the non-residents were supposed to benefit of the general exemption, but this is not the position of the Brazilian IRS. Another situation that you mentioned, Daniel, relates to a dual listing. For instance, we have a Brazilian public company that wants also to offer ADRs in the NICE. This first offer, the Brazilian company probably had to deposit the shares to a custodian here in Brazil and to have the ADRs issued in the NICE. And this deposit, that there may be a discussion, for instance, if there is a 0.38 level, IOF exchange level on the, let's say, the first issuance of the ADRs. And also, when we think about Brazilian residents investing in ADRs, this situation may also happen. Usually this, from a pure Brazilian perspective, although you can have benefits of more liquidity in the foreign exchange, we know that dividends paid by Brazilian company that flow through the ADR, those dividends may not benefit of the general exemption for dividends here in Brazil. So those are, we just provide a brief idea of some tax aspects that should be considered when we are talking about an investment in the equity market in Brazil. But those are always good discussions. The next topic will be also something interesting that we saw some deals recently here in Brazil, and that involves the so-called PIPE deals, which is a private investment in public equity. There are certain challenges, there are certain benefits, there are certain cons, and I'll let also Daniel comment on that.
Sure, thank you. Yeah, the PIPE deals, they became a bit more popular in Brazil in the past 2 years. It's a way of capitalizing the issuer through not only non-registered transactions with the Brazilian SEC, but also through avoiding the disclosure requirements and all the preparation, including the engagement of an underwriter that would be required by the exempted restricted offerings that I've just talked about. So the only specifics of PIPE deals is that theoretically the issuer should not do any sale effort. So it's very limited to current shareholders that would take knowledge, upon taking knowledge of the capital increase announcement, would be able to exercise their preemptive rights in order to not be being diluted, not having their stock participation diluted as a result of the capital increase. So basically, for purpose of understanding the concept, it entails an investment into a Brazilian listed company, so-called issuer. It requires, of course, the issuance of new shares. We're not discussing here a secondary tranche. We are focusing on the issuance of new share for purpose of the company to capitalize itself and in order to either use the proceeds for growth or to pay debt, doesn't matter. It does not, the Brazilian SEC does not require, as I mentioned, the previous registration, to the extent it, of course, doesn't fall within a public offering of securities. So therefore, they should not contemplate any sale efforts distribution. Reason for not actually engaging a financial institution with the purpose of acting as an intermediary of the transaction. It usually has some financial institution involved, but as a financial advisor, not as a sale, an institution to assist in the sale effort. For purpose of the, can we go next slide, please? Yeah, about the preemptive rights, because every shareholder, because it's not a public registered transaction, it's not also an exempted transaction from registration whereby a reduced 5 business day timeline would apply. The 30-day preemptive right would apply in a PIPE deal. This means that once you announce the capital increase, you have to wait for at least 30 days for the current shareholders to exercise their their rights. So if you have a one single investor that's not like a current shareholder and that wants to do the PIPE deal, how do you structure the transaction? The way of structuring the transaction under Brazilian laws, or given these restrictions of the Brazilian laws, would be having major shareholders assigning their preemptive rights, either there or single or a group of shareholders assigning its or their preemptive rights to this specific investor in connection or in order to make it possible to implement the transaction. So people, because of these specific particularities, it's very usual to only implement PIPE deals, or that's actually because the reason for PIPE deals not to be so popular, because you need to, in preparation to the PIPE deal, to find this very specific, this major shareholder or group of shareholders that would be willing to do the assignment of preemptive rights in advance, so that the main investor or this new investor would be able to have a certainty that that its investment will be able to be done despite of the preemptive right requirements. Of course, just as a remark, if you have a deal of 1 billion reais, for example, you have only 50% or shareholders related to only that hold only 50% of the preemptive rights able to or willing to assign these rights. You probably would need to do the deal. You would need to measure the size of the deal, take into consideration that other shareholders, current shareholders, would be entitled to do to exercise their preemptive rights, and the investor would be able only to secure the percentage of the capital increase that relates to the assigned preemptive rights. So within a 1 billion transaction, if you have 50% of the preemptive rights assigned to this investor, the investor will only be able to do the investment up to 500 million reais, unless there is any unexercised preemptive rights towards the end of the 30-day period that could be allocated to the investor as a remainder. How do you price the equity under PIPE transactions? Brazilian corporate law has a provision that does not allow the capital increase to be priced at a certain price that could be deemed to unfairly dilute the current shareholders. Therefore, the common and the most acceptable way of pricing PIPE transaction is the pricing per share that corresponds to the market value of the share, and in this sense, the average trading value per share of the issuer, which of course could be subject to applicable premium or discount in accordance with the market condition or to reflect the actual market condition. If, as a risk, from a risk perspective, you must be ready to deal with potential disputes from minority shareholders if you do a discount, because they could claim that the discount was too high based on their unfair dilution rights, which in the current deals didn't happen so far, but because the discounts were not high enough. About voting and governance rights, because you are dealing with the same type of security that other shareholders would be entitled to have, you would, at the end of the day, if there is a common share being issued or preferred share being issued, you would need to align with other shareholders in order to, as an investor, to have any special or particular corporate governance rights. Some of these rights could be achieved through the purchase of a higher volume of the free float as a result of the PIPE deals. For example, if you achieve more than 10% of the common shares or 15% of the preferred shares, you as an investor would be entitled to one seat in the board of directors of the issuer, to the extent there are not other minority shareholders with larger percentage of this type of shares, and that could win the voting for this seat in a general shareholders meeting. So the usual strategy is to, in order to secure, is basically becoming part of a shareholder agreement with a larger group if you want, as an investor, to have special governance rights as a result of the PIPE deal. Being cautious about the fact that the Brazilian corporate law provides for particular fiduciary duties if you become a controlling shareholders, which would attract other applicable liabilities that would not apply to non-controlling shareholders. Please go to the tax.
And from a tax perspective, what we usually see of discussion is whether the assignment of the preemptive rights to those third-party investors, as you mentioned, right, Daniel, it would be subject to the gift tax levy, the ITCMD, because we know that there may be a discussion on this respect. We understand that that those investors, although they are receiving the subscription rights, they are also assuming obligations before the issuer. So in our opinion, there are reasonable and good arguments to support that the ITCMD would not be levied. But we know that in certain cases, especially some investors may not feel comfortable to accept, let's say, these rights of subscription if the tax is not collected. At the end of the day, this may be a negotiation aspect. I think that's the main tax discussion that we have about the PIPE deals in Brazil relates to the ITCMD levy. Thank you, Daniel.
Thank you, guys.
Let's go to the next topic. It's a little bit aligned with the past discussion that we had with Luis. Is okay, so let's refinance. We are living the pandemic situation. Which are the main aspects that we should bear in mind when we are discussing about debt renegotiation?
Yeah, the point, we are getting to the limit of our time, but I think that the important thing that I want to talk about is that we were talking in relation to all the benefits of those structures, especially using Austria, especially in the reduction of costs related to taxation. However, I think that I wanted with this section of the presentation to point out is that this is not the only aspect that it should be taken into consideration when analyzing a possible rollover or restructuring of existing debts. Because the reality is that you have to deal with other agreements that you already have in place. And some of those agreements, they may present a challenge. So sometimes it's also important to verify what actions must be taken at the local level in order to renegotiate, and if those actions are feasible from a practical point of view. So for instance, if you want to exchange your debt for a new debt and you have securities issued in the capital markets, the question is whether you will be able to obtain the approval by the existing debenture holders or the holders of the promissory note. Are these promissory notes pulverized? Are they detained by several retail investors? So this is a consideration. Whether in order to obtain a waiver, you have to pay a premium, and how much will this add to your cost? If you're restructuring, whether other credits have pari passu provisions, which means that they have the right, if you're making a rollover or a new issuance and you're granting, let's say, new collateral securities, whether you have to grant those same types of collaterals to the other creditors, existing creditors. If there's cross-default provisions, if the fact that you decide that you're going to roll over, but you have some kind of default in a small credit, if this will trigger the cross-default of bigger credits. So in essence, the message of this slide is exactly that when you are discussing the entire structure, that you should pay also attention to several other aspects that will have a impact on such renegotiations.
Thank you, Luis. As you mentioned in your last bullet, there are also the tax impacts.
Yes.
When we are talking about debt renegotiation from the borrower perspective, which are the main concerns, especially if there is any haircut or a partial forgiveness of the debt, is that in principle, the difference will have to be written off to P&L, and this may be considered taxable revenue for corporate tax purpose, PIS and COFINS purpose. And so what do we see in the markets? Sometimes there may be room to structure this debt renegotiation as a debt swap in a way that we could at least postpone those impacts if we could treat that difference as a fair value or present value adjustment. So there's room, specifically in this context of decreasing interest rates, of renegotiating the debt in a way that any discount, let's say, is not treated as an immediate taxable revenue as a debt forgiveness. So this is something that to bear in mind, and for sure we can see of our clients to review those aspects.
Yeah, and that's a very, very important aspect, because I think in certain cases, then you are the tax expert, where you have a haircut or a forgiveness, usually the amount that for which there is a haircut or forgiveness, you could have taxations of up to 20% for the borrower in relation to the amount.
Even greater, yeah.
Even greater.
Yes.
So it's a very relevant aspect to be taken into consideration.
Yeah. And finally, I think we still have a few minutes because the other panel starts.
Yeah. And finally, the next one is again another alternatives of finance that are in the market, which people should take into consideration, which are the fintechs that are changing a lot the landscape in Brazil as alternative means of finance. Those fintechs are spreading in a very expedite way in the market. They are now being used to discount of receivables, and they have been granting lower discount rates vis-a-vis the traditional financial institutions. They have been looking into very creative forms of financing. So the idea here is also to address the fact that the companies that are looking to restructure its debt should also look towards other alternatives than the traditional banking house, because now there are a lot of new alternatives that are available and which may greatly benefit the companies that use them. So that was the idea in order to wrap up the benefits and what is possible to be done in relation to the restructurings.
Thank you, Luis. I'll stop sharing here and see if there are any questions. So I think the idea of this panel was to cover just a few ideas of refinancing strategies, both from a debt or equity perspective. We will be glad to discuss with anyone of the audience if wants to discuss further strategies. We are available. Please feel free to send us an email. We will be glad to discuss with you. So I'd like to thank you for watching us in this fourth panel. We hope you enjoyed, and I'll let also the other speakers to say a farewell message.
Yeah, thanks a lot for listening to us. And if you have any questions, drop us an email. Thank you so much, and enjoy the rest of your day.
I would also like to thank everyone for taking the time to be here with us. Hopefully there was some benefit for our audience of the discussions here.
Right, it's been a pleasure talking to you all, and please feel free to contact us if you have any questions. Thank you.
Thank you. Bye-bye.